So if you guys do not know, for anybody that does miss these calls or you hop on late or anything like that, I do actually drop every single one of these calls on my YouTube channel. So if you guys notice, all these calls are going to be 4 steps of freedom. It's going to have this banner. It is not the same repetitive call. It's going to be, different calls that we're doing like now. And all of them are going to have the date. So you guys know exactly what date each call is from. And basically all these calls are going to be going over, the trades and the Forex setups that I'm going to be sending out through my chat. And I'm going to give, detailed breakdowns of exactly why I'm looking at the setup, why we got in. And, if we lose, we're also going to be talking about why we lost and if there's anything we could have actually done differently. So without any further ado, we're about to go ahead and get started. So the first thing I want to be able to, take advantage of is, come to the harmonic scanner, see if there might be anything that I like, anything I might be able to take advantage of, anything that we might be able to look at for a profitable setup. And as of right now, it does not look like it, which is cool because we actually have quite a few different setups that we can actually go over tonight. And we've been killing it to start the week off so far. There is actually one thing that is a good learning lesson that we'll be able to go over today, that can help you guys in the event that it happens to you. It is a rare situation, but it is a situation that can happen to anybody nonetheless. And I just want you guys to know how to handle it. Okay. So, where do we start? So I guess we could start with the trade I did that I sent out yesterday. Let me make sure I look through all these too, so I'm not forgetting anything. Yeah. Man, the yawns are coming out crazy tonight. Okay. All right. So yeah, so we're going to go over the trade I did that I sent out yesterday, which is GBP NZD. So GBP NZD, a couple of different scenarios could have happened for you guys, just depending on your broker. I think it happens to the majority of people though. So this is actually what I wanted to be able to talk to you guys about. So GBP NZD, right? Also too, if any of you guys that are on the call are already in my chat and you put in AUD USD, make sure that you guys saw that I did say delete that trade I did leave and not come back. So we're actually not even going to take the time to break down that trade setup because it didn't actually activate. So that kind of be like a waste of time. So GBP NZD is actually a trade setup that I sent out yesterday at what 6:42 p.m. So this trade I did was actually, like I said, it's one or two things that could have happened. So this trade I did was actually a successful trade idea, but there was a very specific situation to where some of you guys possibly got stopped out, even though the trade I did never actually hit stop loss. And that's something I actually want to be able to go over on the call, so that you guys know, how to be able to handle the situation based off of whatever broker that you're currently trading with. So GBP NZD, as you guys can see, I'm always going to give you guys the parameters. Basically, every trade I did is going to be a buy limit and or sell limit, which is a pending order. And I'm also going to give you, the picture so you guys know exactly what is happening, where I'm targeting. And I want you guys to kind of start getting used to physically what my setups look like. And maybe your eyes can start getting trained to understand, what I like to see in the market whenever I'm sending out a trade I did. So, without any further ado, let's go ahead and break that down. So what I want to be able to do is I like to usually pull up a different data feed, which just simply means pulling up a different broker so that the current chart that I have marked up, I don't have to like accidentally erase anything or nothing like that. So I mark up everything usually on FXCM, and then I'll just go over to Owanda to be able to, kind of go into more detail and break this down for you guys. So let's actually do that. All right. So, what was it based off of 3? Okay. Let me go ahead and hit that replay tool. All right, but cool. So the way I like to be able to do things, guys, is I want to be able to, make the market look how it was presented to me at the time that I marked the setup and I was looking to take the trade idea. So that's why I use the replay tool to be able to erase whatever already happened so that you guys can see in its true form what I was looking at whenever I sent it out. So for me personally, I always tell people what you want to be able to first off figure out is what is your favorite time frame to be able to mark a chart up on, and what is your favorite time frame to be able to take advantage of. So my personal favorite time frame is going to be the 1 hour. The 1 hour is a time frame that I'm very, very comfortable with as far as trading, and I like to be able to form my initial market sentiment. Some of you guys might like using a 4-hour, some of you guys might like using a daily, so on and so forth, but this is just me personally. So the first thing I want to be able to look for whenever I'm on a 1 hour is specifically going to be, I want to be able to figure out what the overall trend of the market is going to be, right? So in order to be able to, figure out what direction you want to trade, I obviously feel like it's very important to know what, the overall trend of the market is going to be. So first off, the thing that I'm going to do is, as I said, I'm going to figure out what is the overall trend of this market. So the overall trend of this market is going to be what, right? It is an uptrend, obviously. Like it's not a if, and, or, but about it. This is obviously an uptrend. So the market created, a low down here, and it's clearly been trending up. So this low is actually set November 8th. So as you guys clearly see, this market has just been straight bullish, basically, not even basically, for 2 consecutive months. So within this bullish trend, excuse me, we had somewhat of a deep retracement of about 310 pips, but outside of that, the market clearly has just been unforgiving to the upside. So any type of shorts or selling opportunities that you might have been looking for would have either had your stop loss hit, or you maybe would have got, some type of scalp. So some of you might be wondering, okay, but you took a sell on this. Exactly. And I'm actually going to why I took a sell. So one of the dopest things that you guys can be able to take advantage of is it is okay to take a counter trend trade. So I know oftentimes, they preach trading with the trend, and I'm not here to tell you that that's bad. Like that's exactly what you should be doing. But whenever you get a little bit more experience, you definitely have the ability to start taking advantage of, what I'm saying, counter trend trade ideas. And I'm gonna show you guys exactly why I took advantage of this and what are some of the confirmations that I saw, right? So for me personally, whenever I was looking at this uptrend, one of the confirmations that I like to utilize that I recommend everybody get familiar with is the RSI. So the RSI is one of the easiest indicators to be able to help identify reversals, help identify, changes in trend and things of that nature. So this is one of the things that I want to be able to teach you guys, because it doesn't necessarily take a whole lot of skill to be able to, utilize the RSI, but it does take patience, because it's going to give you hints in the market, but it doesn't mean whenever you see the hint that you're going to immediately act. You're going to have to wait, be patient, and then allow the market to leave footprints. And those footprints are basically going to give you the ability to, it's kind of like being a hunter. You kind of got to sit in the tall grass, right? You got to wait for the opportunity to present itself. And then once it does, you got to pounce, okay? There's a lot of people, you lose a couple of trades and then you see an opportunity that you like, and then you're too afraid to take it because you've previously lost money, right? So that's one of those fears that you have to get rid of. The only way you can get rid of is by doing what? Back testing, okay? So first off, the thing that I want to be able to show you guys is, since we identified that the overall trend is going to be an uptrend, let me tell you one of the reasons why I started looking for a counter trend opportunity, okay? So the RSI is going to be good for something called, 2 different things I like to look for on the RSI. I like to look for divergence, okay? And I like to look for the trend showing exhaustion. What do I mean by that, right? So simple terms, this white line, whenever it is remaining inside of this purple box, you really don't necessarily want to do too much, right? Whenever you see the white line start peeking outside of the purple box, that is whenever the market could start giving you hints that possibly the momentum in that given direction might be weakening, might be slowing down. It might be showing you, okay, I might be reversing at any given moment. Now, it is not a guarantee. So it's not like as soon as you see the white line come outside the purple box, you just randomly hop in for a sell, because why? Obviously, the market can just keep going up. So if you're just like, oh, I'm gonna just randomly buy it and randomly sell it anytime it comes out, that's not how you want to take advantage of this. So let me show you guys actually the right way to be able to utilize the RSI so that you can, be patient and then take advantage whenever the market presents itself. So if we focus on this area right here, right? As I said, if the white line comes outside the purple box to the upside, that is going to be a hint that the market is saying, hey, I am getting exhausted to the upside. Buying momentum is getting weaker. That means what? It might possibly mean a reversal is coming. It might mean that a possible short opportunity is going to present itself. But just like how I showed you back here, what would have happened if you would have jumped the gun and just randomly hopped in for a sell? Your stop loss would have gotten hit. So remember when I was originally saying the market is going to start leaving footprints and giving you hints that you just need to be patient and wait for? This is what I'm referencing. So exhaustion in the market is one of my confirmations. This was one of my initial ways to see, okay, the market might be getting exhausted from this point, but it's still moving up. What I want you guys to see is notice the specific difference, right? This is a very strong impulsive move, okay? This is about a 212 pip move, right? But notice from the point that you see the RSI showing exhaustion, the market continues going higher, but look at how choppy it is, right? Look at the difference between this straight move up and this kind of chop, 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 chop. All of this choppiness is the footprint being left saying, hey, we're not just going straight up. We're still going up, but it looks like it's a lot harder to keep pushing up, which means what? This is where the exhaustion is really trying to show you itself, okay? So what is the next thing that I want to be able to look for, okay? Divergence, right? So if you guys go to my YouTube channel, I definitely have a video going over divergence. And in my personal opinion, I owe a lot of success in my trading to divergence. If you guys gotten on enough of my calls and you start getting on my calls moving forward, you are going to see that damn near every single successful trade that I send out is going to have divergence, okay? GBP NZD had divergence. I also sent out GBP Jpy earlier that went for about 100 and I don't know how many pips it went for, like 126 pips. That also had divergence, okay? So what exactly is divergence? I got you. Now, first off, what I want you guys to start looking at is, if you pay attention right here to where the candles are, I want you guys to start changing your candles to the line chart, okay? Once again, I want you to change your candles to the line chart. Why do I say that? Once you're practicing divergence, it's a lot easier to see it if your line chart looks exactly like your RSI. If you have the candlesticks, it might be a little more difficult for you to see what I'm about to show you without your eyes being trained yet. So I like to put it on a line chart because these basically look exactly the same. So where I'm going with this is, if I were to take this trend line from this initial peak that where the exhaustion started and pull it down to where the market currently was, right? This is clearly trending down, right? Now, divergence is very, very simple as far as explaining it. Detecting it and being able to identify with your untrained eye, maybe not so much, right? But this is why I'm here to be able to show you guys how you can detect it properly. So you simply want to be able to see if your indicator is trending down or trending up, you want to be able to look at your chart and see that it's doing the exact opposite. I'm gonna repeat that one more time. If you're looking at your indicator and you see that it is trending down or trending up, you want to be able to look at your chart and seeing that it's doing the complete opposite. So obviously, what is the opposite of down? Up. So guess what I'm gonna do? If I were to take a vertical line, right? So you guys can get the visual and line these up, okay? What I'm gonna then show you is this is our divergence. So look, this is clearly going up, right? In the same instance that this is clearly going down. Ladies and gentlemen, that is divergence, okay? The quicker you learn divergence, I guarantee you. Shout out to I really got to give it to Mannequin Yona. So for any of y'all that plug into, the harmonic scanner educator Mannequin Jonas, that's one of the people that really like hard press this information in my head. Like he used to talk about divergence so much, but it really made a big difference, okay? So now that you guys see what divergence looks like, I've now shown you guys literally two of my strongest confirmations in the market: exhaustion and divergence, right? I'm usually always going to get the exhaustion, the divergence. Sometimes I don't always have divergence depending on my setup, but whenever I do have it, I'm gonna be honest with you. I don't want to say it's a guarantee, but you know what I'm saying? It's a high percentage that is going to be a profitable setup just from my track record, okay? Obviously, you're still going to lose trades that have divergence. Nothing is undefeated in the market. We obviously know that, but it has to be explained for anybody that might be new. But I'm just letting you know it's a very high percentage. And I mean, if you go look at my YouTube channel, right? I drop all of my setups on my YouTube channel. Also, every single one of these live trading calls that I record, I drop on my YouTube channel. So if you guys were to actually take out a day and go look at all my videos, you could be like, damn, he ain't lying. All these setups that have divergence, them joints be moving. So this was actually no different. So from those two confirmations, exhaustion and divergence, right? The only other thing that I originally did for anybody that's late, I identified what the overall trend was, which is an uptrend. So we do know that we're taking a counter trend trade. once I've gone through these confirmations, that's pretty much all I'm doing. I'm gonna be honest with you. Like, my trading style is very simple, right? Because the next thing I'm finna do is now I'm just finna look for an entry. Think about what I just said. I identified the overall trend, right? Then I need to figure out, am I going to trade with the trend or I'm going to trade against the trend, right? So in this example, I'm trading against the trend. Why? I saw divergence, I saw exhaustion. Once I've gone through the confirmations I literally just named, all I'm literally doing now is looking for an entry. It ain't nothing else to do. Other people might be a few more steps. For Tyree, I'm basically done, okay? So now what I'm about to do is I'm about to show you guys how I look for my entry, okay? So remember, as I said, we're using a replay tool. So that's why you don't see a clock over here. I already erased whatever already happened. And this is what the market looked like at the time that I sent it out. So once again, if you guys are in my Telegram, this is what this setup looked like whenever I originally sent it out, right? So how did I find my entry? I only utilize the 1 hour to the 12-hour time frames to look for my entry. It's a lot of people that use smaller time frames, 15-minute, 30-minute. That's cool, right? That wasn't really working for me. What I ended up finding out was I used to get my stop loss hit a lot when I was trying to mark up my chart based off of a smaller time frame. So what did I do? Based off of back testing, as I said before, I was able to find out, you know what? I have a higher success rate by using the higher time frame. That's what works for me. It might not work for you, right? So all I'm simply going to do is I now want to be able to look for my entry candle, which is an engulfing candle. I would like to think that everybody knows what an engulfing candle is. It is one of the simplest candle formations to be able to identify just because it pops out like a sore thumb. We literally have one right here, okay? So an engulfing candle, right, is literally meaning the body of one of the candles is engulfing the other candle. So a bearish engulfing candle, obviously my candles are red and green, your candles might be blue and purple, so obviously keep that within context, but the red candle is bigger than the green candle for a bearish. A bullish, right? A green candle is bigger than the red candle. So obviously, since I'm looking for a sell, I want to be able to identify a bearish engulfing candle. Now, the way that I look for my candle is I want to essentially find the biggest engulfing candle on the highest time frame. I'm gonna repeat that one more time. I want to find the biggest engulfing candle on the highest time frame. Okay. So also for anybody on the call, because I'm gonna be doing this referencing where I learned this from, you guys want to make sure y'all tap into steady and bounce back. So my personal trading style is going to be collectively between 3 different strategies, right? On Go Live, bounce back, steady, DeLorean. I would strongly recommend that you do not try to learn all 3 at the same time for obvious reasons. Pick one, stick to one. Whenever you feel like you've gotten good enough, then you can move on to the next one. To be fair, steady and bounce back are basically the same thing. DeLorean is a completely different thing in itself. One of the main things I utilize for the DeLorean is the TDI. The reason why y'all never see me talk about the TDI on the call is because, I'll be honest with you, I don't feel like explaining it because it's a little complicated. So make sure y'all tap into Tyrone Foster's favorite sessions and go watch the videos to where he breaks down how to utilize the TDI. I guarantee it is going to make a very strong difference in your trading, no matter what your strategy is. The TDI has nothing to necessarily do with the DeLorean. It helps with that strategy, but you can utilize it with any strategy. I just show y'all the RSI because the RSI is similar to the TDI and it's a lot easier to explain, okay? Now, with that being said, I'm now going to start flipping up time frames because I want to find the biggest candle on the highest time frame. So this is the 1 hour. I know I can probably find a bigger candle if I start working my way up. Let's go to the 2 hour, okay? Once again, we have another bearish engulfing candle, right? But I'm not content yet because I don't know if this is the biggest candle since I haven't gone through all the time frames. So I messed around and got to the 3 hour, okay? Look at this baby right here, okay? Now let me go back to the 1 hour and show you guys the difference, right? We got a small one, slightly bigger one, the biggest one, right? That is what I mean by saying I want to find the biggest candle on the highest time frame. The most volume is going to be obviously in the bigger candle. So you don't want no little, I'll be honest with you guys. I know I ain't got my camera. I'm a slender individual, okay? So if you look at me, I'm not the kind of engulfing candle that you want. You want an engulfing candle that look like Shaq, right? I think the funniest thing I saw, uh, I don't know if you guys have ever seen the picture where Shaq is standing next to Kevin Hart. That is exactly what kind of engulfing candle that you want. If you guys can visualize Kevin Hart standing next to Shaq, right? Shout out to C. John, actually. That's who the hell, I forgot who I learned that from. Shout out to C. John. I learned that from C. John from like one of his old YouTube videos. It's called the Shaq and Kevin Hart. You want an engulfing candle that looks like Shaq and Kevin Hart, okay? So this is basically that, a big ass engulfing candle. Now, we're not done yet, okay? Because you still need to figure out where you're going to enter based off of this candle. You can't just enter all willy-nilly, you feel me? So what is the next thing that I'm going to do once I've determined that this is going to be the candle of interest, right? The reason why I don't need to flip through the rest of these time frames is because obviously I already sent out this trade. So I know that this is the candle that I ended up concluding is my favorite candle. So there's no need to, do all this other stuff because I already did all that prior to the call. So the 3-hour candle is what we're settling on, right? Once again, what I want you guys to start focusing on moving forward, the reason why I like sending these pictures is because I want you guys to start seeing how similar a lot of my setups look. And you also can see the time frame. So you can start being like, okay, this candle Tyree found on the 3-hour, right? That's why I don't just want to send out the parameters. I want you guys to have the visual, okay? So the next thing I'm going to do is I'm now going to start utilizing the Fibonacci tool, okay? The Fibonacci tool is another resource that I utilize that gives me a lot of success in the market, right? Because it gives you specific areas to focus on. Obviously, do not get it confused. It is not a magnet. The market is not like, oh, okay, I'm gonna go to the fib. No, but the fib is gonna help you identify areas that make sense in the market to be able to take a trade, okay? So this specific fib setting I am utilizing is going to be the 50%, right? Why am I utilizing the 50% Fibonacci retracement? Let me explain, okay? So the 50% Fibonacci retracement is going to give you essentially like an equilibrium of the candle. What do I mean by that? This is the sweet spot. This is a sensitive spot. This is one of the best spots to enter off of an engulfing candle, the 50% of the candle. Now, even though it is the best place to enter, I want you to listen to what I'm about to say. It is not guaranteed that the market is going to give you a pullback to the 50%, right? The market may come close, but it might not actually hit the 50%. So if you just set an entry or look for an entry at the 50%, you're going to miss out on a good amount of trades because the market doesn't always give you a deep enough retracement to enter off the 50%. But I like to be able to see where it is just, for relative perspective. So what I'm about to now show you guys is from this point, I'm going to show you guys how to be able to mark up a zone. So of course, a lot of you guys know a lot of people trade off of zones, right? Support and resistance zones. You might wait for a rejection, some type of candlestick formation, a doji candle, whatever, right? So the way that you can mark up a zone based off of engulfing candle is going to be like this. You can start from the opening of the candle to the 50%. Ladies and gentlemen, what you now officially have is a selling zone, okay? Because you don't necessarily need to utilize the entire candle, right? You just need to find a specific area within this engulfing candle that you want to see the market give you a retracement to before you essentially look to execute your trade. So basically what you would like to see is something like this, some sort of retracement, right? And then a continuation. That's literally what you want to see. Now it's two kind of people, right? There are the people that wait for the market to get to the zone, give some sort of rejection, give some sort of candlestick formation, and then they're going to buy or sell by market, okay? I'm not going to say that that is a bad idea because that's what a lot of people do, right? But trading is all about what works for you. It's not about what works for a lot of people, right? What works for me is I like to be able to do buy limits and sell limits. If you know anything about pending orders, you need an exact entry. You can't use a zone for a pending order. You got to type in an exact number. So you might be like, okay, Tyree, so within this zone, how do you actually find an exact area that you're going to find for an entry? I'm glad that you asked that question, right? So let me show you guys how I actually look for my exact entry. Let me let this play out a little bit more. All right, cool. How far did this pull back? This was, yeah, that was it. Okay, cool. So now what I'm going to utilize is going to be the other Fibonacci, okay? So this was the 50% fib. This is going to be the fib that more people are familiar with. That has like, like the 61.8, the 88.6, bam, okay? Let me stretch that out a little bit so you guys can see it, okay? Now, this is what I also utilize in unison to be able to find my entry, all right? So what I want you guys to be able to see is within this sell zone, right? I want to be able to look for a fib retracement that I'm going to utilize as my entry. Okay, so notice how the only fib retracement within this sell zone is going to be the 61.8. Literally, that is exactly where I'm going to put my entry. Very simple. So everything I'm breaking down to you guys is literally what I do every single time I take a trade, okay? So in the simple scope of things, this is where my entry would be. Just like that. Why? Once again, because I want to utilize the fib zone that is actually within the sell zone. Okay? Now, if I let this play out, you guys are going to see what ended up happening. And like I said, there's a learning lesson from this. I mean, look at that thing. Look at that. Beautiful. Gave another engulfing candle within the engulfing candle. Now, this is where it got a little tricky, okay? So let me actually show you guys this. This is where it got a little tricky, okay? So, unfortunately, it was a lot of people, me included. I actually have two different brokers. One of my brokers did what I'm about to explain to you. The other one kept me in the trade. So what I want you guys to notice, let me get you guys to type in the chat. Did this trade ever actually hit stop loss? Yes or no? Visually, from what you're looking at, type in the chat, did this trade ever hit stop loss? Yes or no? Let's get some participation. So let me get y'all to go to the chat, type yes or no. From what you're seeing visually, right? Don't overthink it. Did this trade hit stop loss? Yes or no? Okay. So yes, the answer is obviously no. It did not hit stop loss. How do we know that? Our stop loss is going to be at the peak of this red. Obviously, the market never got up there. Now, unfortunately, a lot of people, like I said, including myself on one of my brokers, the other broker left me in the trade. The other broker kicked me out. I woke up, right, a little tight, okay, because I was like, all right, I had an alert set. When I woke up, I had the alert say TP1 hit. But for whatever reason, I went to one of my brokers and the trade was no longer there. I was like, okay, wait a minute now. I was like, okay, so maybe when I fell asleep, it pulled back, hit stop loss, and then hit TP1. Then I went to check the chart. I was like, nah, it never actually hit stop loss. So some of you guys that took the trade might have experienced the same thing I'm explaining. You're like, what the hell? Why did the trade kick me out if it never actually hit stop loss? Like, what is going on? Like, the market is cheating. This is the example that I want to be able to explain on this call, and I'm going to teach you guys how to be able to handle it moving forward. So first thing I want to be able to say is, hopefully you guys understand how spread works, okay? So the reason why you always see my stop loss is always going to be a little higher than the highest point of the trade is because I've added spread to it for situations like this. Now, the situation that we encountered is a very, very, very rare situation, okay? This is literally only the second time I've experienced something like this in the 2 years that I've been trading. So that literally goes to show you it damn near doesn't happen, okay? But in the event that it does happen, right? This is how you can handle it moving forward, okay? It's not going to be a guarantee that the issue is going to be resolved, but you definitely want to try. So if you look at this, this market came almost 8 pips, 7 pips away from stop loss, right? The spread on GBP NZD is normally only 1 to 2 pips. So you're like, okay, this isn't making sense. If you're saying spread is only 1 to 2 pips, but it was 7 pips away from the stop loss, why the hell did it kick us out? I got you, okay? One of two things happened, right? I don't know if you guys understand the term. This is actually a good learning tool. So if you guys have never utilized the website called investopedia.com, it might be a resource that you guys want to tap into. Investopedia.com. Let me go to Google. So I'm gonna look up a term for you guys so you can learn. We can all learn together. So Investopedia. All right. So Investopedia basically is just a good investing tool that gives you, like a lot of different definitions and a lot of dope information. Okay, it's not specifically for Forex, it's just for investing in general, stock market, commodities, all type of stuff. It's kind of like Bloomberg, all right? So I'm gonna type in a term called slippage, right? What is going on? Okay. Slippage. Let's look at it. All right. What is slippage? Slippage refers to the difference between an expected price of a trade and the price at which the trade is executed. Slippage can occur at any time, but is most prevalent during periods of higher volatility when market orders are used. It can also occur when a large order is executed, but there isn't enough volume at the chosen price to maintain current bid or ask price, right? Now, even after reading that explanation, y'all still might not know what the hell slippage is, so I understand, but I just wanted to be able to show you that this is a good resource to utilize in trading. Now, slippage basically works like this, right? Slippage is a concept of the market sometimes, right? Because we know it's manipulated. It's basically manipulation. So it can be instances to where what you're saying happened. The market is going to basically kick you out of a trade, even though it came nowhere near your risk being your stop loss, right? That is called slippage. Because basically it is what it sounds like. It just slips, okay? Now, that's not some type of shit that you want to hear. You don't, what the hell slippage? Like, that's some BS. It is some BS, right? But it can happen. Now, the other thing that could have happened, because like I said, it's one or two scenarios. It's either slippage or what I personally ended up saying whenever I dove a little bit deeper into this, right? If I go to a lower time frame, let me show you guys something, right? I don't know if you guys understand session timers, and this is a good time to be able to plug in this YouTube video because a lot of people really don't understand time and price. And this is a good time for you guys to go back and watch this video. Best times to trade. So a lot of you guys may not know the session times or the proper session time. So what I would recommend, okay, is whenever you guys get a chance, you guys go watch this YouTube video to where I am breaking down. Okay, perfect. You can look at this right here. So I'm gonna go ahead and drop this in the chat. So whenever you guys get a chance, y'all go look and take advantage of this YouTube video to where I'm breaking down, the best times to trade, AKA the session time. So if we actually look at this, right, the New York session opens at 8 a.m. Eastern. I repeat one more time because this is going to be a big deal as to what I'm referencing right now. The New York session opens at 8 a.m. Eastern. I am Central Time, which means it would be an hour earlier. So that would be 7 a.m. If you do not know, whenever a session opens and closes, there are periods of time to where the spread increases. Okay, I repeat that one more time. When a session opens and closes, there are going to be short periodic times within that the spread is going to increase. Why am I bringing that up? If I hover around these areas to where the market came close to the stop loss, look at the time below, right? If you look at this little gray box down here that disappears whenever I go a little bit lower, notice at around 7 to 7:15 is whenever the market peaked, and that's the same time we got kicked out the trade. I'm bringing that up because that was the opening of the New York session. Now, as I've said before, this is an extremely rare situation. It is literally, once again, only the second time this has ever happened, but it's pretty difficult to avoid something like this. Okay, so basically what I'm assuming happened was the spread, because I was asleep when this happened, the spread increased enough at the opening of the session to kick us out of the trade before the market basically did exactly what I knew it was going to do. Okay, so at the end of the day, this technically is not an L, right? Even though you may have lost on the trade, I can't technically consider this an L because it was a successful trade. It just is, one of those strange BS situations that unfortunately you kind of just got to take it on the chin. Now, let me explain how you guys can possibly resolve this issue. What you can do is you can email your broker if you were kicked out of the trade. You can take a screenshot showing, okay, the trade peaked at, 20349, right? About 7 pips away from the stop loss. You can also, let me rewind. So you can send an email to your broker, make them aware, hey, I was kicked out of a trade that never actually hit my stop loss. You can request a refund, okay? You can also, right, see, they're probably not going to do it. You can see if they'll give you the profits that you should have made, right? Because obviously this is deep profit. Deep. Look at this. It literally went straight to take profit too. I would have been tight, just like the rest of you. I was tight. Because like I said, one of my brokers kept me in, the other broker kicked me out. And most of y'all probably only had one broker, so y'all missed out on the entire move, unfortunately. So when you reach out to them, request a refund, right? Give detail, right? Let them know the pricing point that the market peaked at. Let them know it's about 7 pips away, right? and see if they'll give you the refund. The reason why I'm saying you can try, it's not a guarantee though. They might just straight up say, no, it's valid, right? And there's nothing you can actually do about that, but you're definitely not going to get your money back if you don't email them. So at least try to email your broker, right? Request a refund and request them to give you profit of the money that you missed out when the move went in your direction. Now, I'm gonna tell you what's probably going to happen. Assuming that they actually approve it, you're probably only going to get the refund of the money that you lost. They're probably not going to give you the profit that you missed out on. So if you're risking $100 and you lost the trade, they're probably just going to give you back the $100. They're not going to give you the profit that you would have made. Reason why I'm saying that is because, as I told you, this is only the second time I've experienced this. I have not gotten a response yet. Normally it takes like a day or two to get a response from the brokers. So I'm still waiting to see what they're going to say. But the previous example that I did have happen to me, I actually did get a refund on my position. But like I said, they did not give me any of the profit that I should have made. So I'm just speaking from experience, and I hope you guys are able to take this information and utilize it, because if you ever have a situation like this happen again, which is rare, instead of freaking out, I literally broke down exactly the steps to take. And you really just got to cross your fingers. There's nothing else you can do. Like once you tell them what happened, they're either going to approve it or deny it. And then if they deny it, you just got to take it on the chin. It's not going to benefit you to like try to escalate or none of that. So please don't even waste your time. Don't even get mad. It's what's going to happen with the game. Always remember, we're not supposed to make money in the market in the first place. So it's kind of just one of those things that's going to happen. Okay. Type a 1 in the chat if y'all understand, right? Type a 1 in the chat if y'all understand what I just explained. Type a 1 in the chat if you guys understand what I just explained. Okay. All right. Perfect. Cool. All right. So like I said, it is a learning lesson. It sucks at the end of the day, but I mean, you kind of have to have, it's like you got to lose enough trades to become a good trader. So this is something that it had to happen so that you know how to be able to act on it moving forward. All right, so that's Gbp and ZD. So like I said, I'm still going to count this as a profitable trade, even though I know a good amount of people got kicked out. But, you know, technically speaking, it is a profitable trade because it never hit stop loss. It just sucks that, you know, we had to deal with that kind of situation. But like I said, it's only happened to me twice. So hopefully we never really have to worry about this happening again in the future. But yeah, so that was Gbp and ZD. I'm still I'm still sick about it. But like I said, it is what it is. Look at this joint, 130 pips, 4.2 to 1 risk to reward. Disgusting. Okay. Now we're going to go to, that just kept going higher. Hopefully that still hits. All right. So the only other thing we got to talk about is Gbp Jpy. As you can see, I have these other two marked up. This doesn't look like it's going to happen today, so I'm not going to waste my time speaking on it. Whenever I actually send this setup out, we'll talk about it. But since I'm still waiting, I'm not going to waste my time breaking that down. And as you can see, NZD CAD is still going higher. So until we get a deeper retracement and actually send out this trade, I'm not going to waste my time breaking that down either. So we're just going to speak on the trade that I did actually send out, which is Gbp Jpy. And we got about 10 minutes before I hop off and get ready to get on this. So definitely make sure if you guys had a pro pack, y'all tap into John Dolly, Rob Kumar, because that's literally what I do 3 days out of the week when they go live. As soon as this call is over, I literally hop off this call and then hop on their call and continue to get educated. Okay. But yeah, so Gbp Jpy, this is also what I sent out right here, right? Sell limit. Once again, I want you guys to always focus on the pictures that I send out so your brain can start identifying how similar a lot of my setups are. Now, if you guys remember, right, this ain't the first time this week that we didn't handle Gbp Jpy. Needless to say, Gbp Jpy, we handled it rather nicely, right? So if I scroll up a little bit, literally the first trade of the week, right? Gbp Jpy 114. No, it's USD Chef. Where's Gbp Jpy? Right here, Gbp Jpy. Ended up going about 95. It went more than that. But I don't feel like finding that update. So it actually ended up hitting take profit 2 for 126 pips. It went for a 7.5 to 1 risk to reward. This was the original setup. Okay. Now we're literally looking for an opportunity to hit it again, right? If y'all get on any of Tyrone's call, that's what Tyrone be saying. Hit it again. Hit it again. If it pulls back, hit it again, right? That's what we're literally doing. We're hitting it again. So as you can see, right, this was the original move that we profited on. This is the pullback, and hopefully we get a continuation, right? Because I was really looking for a big drop. So since it pulled back, I think this is going to give us the big drop. So this was the original move over here. And if you guys see this, this was our divergence that I told you about, hint, hint. So now you've seen the divergence be effective on GBP and ZD. You've also seen it being effective on GBP Jpy, right? So this was clearly going up. At the same time, this was clearly going down. So this was our divergence on this play that basically initiated, that extremely profitable setup. So basically what I'm looking at is, because it's not too much breakdown I can do because we already broke down the original setup. So this is basically going to be pretty quick. So the original setup, when we broke down, what I was looking at was, peep this, right? The market broke this previous structure low, okay? Where this wick is, the market broke this previous structure low right here, okay? So since the market pulled back and it still never broke this initial high, this still looks to me like it is going to still be a continuation of the downtrend. Even though it broke above this high, which is where we got our entry, it never broke the initial high, okay? Just breaking any high in a relative move is not the same thing as the initial high that started the actual trend, okay? So the market never broke this initial high, but it did break another low. So it broke this low, pulled back, dropped, broke this low. So what am I looking for? Once again, pull back, drop, right? Simple. Literally. So all I simply did was same thing. Whenever I came to the chart, I was like, okay, right? The market didn't break this high. It rejected. Because if you guys see, right, this is actually an engulfing candle right here. And if you guys see, if you follow that dotted line, right, the market rejected off of this with these wicks and then gave us our drop. So it makes sense that the market dropped because it reacted off of something to the left over here. Okay. Now, within this drop, look what we have right here, right? Somebody drop in the chat. What is this called, right? What is this void in the market called from this wick to this wick, right? I know it's a couple people on here for a fact know what this is. Let me get somebody to drop it in the chat. What is this called right here? One of two things. There's one or two terms that you can utilize to call this. What is this called? Somebody drop in the chat, right? Well, yeah, a gap. It's more specifically, I would say an imbalance, but yeah, correct, a gap, right? Gap, imbalance, inefficiency, all of the above, okay? So this is basically going to be something that we look at as a potential, footprint in the market. The market is basically saying, okay, whenever you have a strong impulsive move in any given direction, a lot of times it may leave imbalance or inefficiency. What does that actually represent? That represents the market had so much pressure going in that direction that it had uneven pricing. Now, a lot of times what the market is going to do is whenever it leaves this void or inefficiency, it is going to essentially fill it in before it continues going in that direction that was initiated by this. So what does that mean? The market essentially is going to possibly pull back within this imbalance. It can either pull back to the opening of it, or it can close it all together. And then it's going to give us our continuation. Hopefully it doesn't leave without us, but y'all know how I am. It's either going to activate or I'm going to just let it go. I don't randomly be like, oh, it's leaving, I'm going to just hop in. No, it's either going to activate my entry or it's just going to leave without us. Y'all have seen me take enough setups and break down enough setups to where my entries are very specific. So I have the utmost confidence that I feel like all my entries should activate for the most part. That's just how I feel. So how did I break this trade down? The same way that I broke every other trade down, right? So keep in mind, we're on the 1 hour. What am I going to do? I am now going to start flipping through these time frames to find what? The biggest engulfing candle on the highest time frame. I actually didn't check to see if we had any divergence, which we don't. Yeah, we definitely don't have any divergence. All right, cool. So the 1 hour has no engulfing candle. Let's check the 2. Uh-oh. We got an engulfing candle, right? But guess what? I want the biggest one on the highest time frame. This is only the 2 hours, so it could get bigger. The 3 hour. All right. This is technically an engulfing candle, but you really want to stay away from the ones that have such a gigantic wick like that, right? way more wick than it is body on the candle. It is technically an engulfing candle though, because the bearish candle is technically bigger than the green one. And then we ended up getting to the 4 hour, and this was the money shot right there. Look at it. Right? Look at it. So you're getting the rejection off of this previous high, right? Broke the low, and now we're looking for the continuation. Okay, so I'm potentially looking for this joint to drop almost 500 pips. So when I tell you guys, I'm gonna teach y'all how to become good swing traders. I'm gonna teach y'all how to become good swing traders, but you gotta hold the damn trade, right? Don't let a little pullback make you just manually exit the trade. You're gonna miss out on all these moves, man. My trades be moving. I've shown y'all too many examples. These joints be moving, but you can't freak out because it starts giving you a deep pullback, right? Once you adjust your stop loss to break even, I'm gonna break something down to y'all that helped me. Once you adjust your stop loss to break even, either let the trade continue going in your favor or let your break even get hit. Do not manually exit the trade. That literally defeats the whole purpose of adjusting it to break even. Okay, I'm gonna repeat that one more time. Once you adjust your stop loss to break even, either let it hit your break even or let it keep going in your direction. Because if you manually exit at that point, it entirely defeats the entire purpose of even putting it at break even. It's like if you just finna exit whenever you feel like you finna exit, just exit as soon as you feel like you finna adjust it to break even. It's the same shit. You feel me? So this big ass 4 hour engulfing candle, right? I'm gonna do the same steps. What am I initially gonna do? I'm gonna take the 50% of this candle, which you guys can see, right? I can draw my entry zone like so, right? From the opening to the 50%. And then as you see, I'm gonna take my fib from the high to the low. I want to see a retracement, okay? And this is actually a good example. I like that I'm seeing this right here in real time. This is what I mean by for the people that don't like setting pendings, okay? If you want to wait for the market to come back to the zone and give you a rejection, this is essentially what a rejection looks like. Now, obviously, I still want the market to come back higher, but this is a concept of what you want to see as a form of rejection. So this market has rejected multiple times within the sell zone. So if that's something that you feel comfortable with, and that's all you need to see to be able to take, a sell by market, you can do that. But obviously, I'm showing you guys for a very good reason why I like doing pending orders, because I want to be able to have my trade give me my exact entry, right? When you do a market execution, a lot of times it's going to be a couple pips off from wherever you actually wanted to get in. I never really cared for that. I want it to be exactly where I want to get in. I want my stop loss to be exactly what I thought it was, right? So 61.8%, as I explained before, I want to be able to use the fib level that is within my entry zone. There's only one fib level within the entry zone, which is a 61.8. You want to know what's so dope about this? I'm going to fuck y'all up. What if I were to tell you I didn't even put this entry on here? This is the same entry. Look to the left. Look to the left. This is the same exact entry from the position that we took earlier. I literally didn't even do anything to this entry. Whenever I marked this up and pulled out the fib, I was like, well, damn, the fib literally matches up exactly with the previous setup that we took. I ain't even got to do nothing. How dope is it that the market is about to give us an entry at the same spot that we literally just, the stop loss is a little bit bigger, but y'all get what I'm saying? That's dope. I didn't even have to do nothing. It literally perfectly lined up with the fib. Like I didn't even, as you guys can see, I never erased this setup. So whenever I saw the candle, that's why I got these purple lines on here, because I didn't want to erase this setup yet. So these purple lines were the two original take profits for this setup. So instead of erasing this, because I'm gonna still make a YouTube video for it, I just turned these to purple so it didn't cause my eyes to get confused with the new take profits. The new take profits are green, right? This and this are still the same take profits from this original move. So the only take profits that I added was here and here. As you can see, they're basically still relatively close to the original take profit. So I can damn near use the exact same parameters outside of the stop loss for an entirely new setup to take a continuation for itself. It literally does not get any better than that, ladies and gentlemen, right? Now, with that being said, once again, if you guys did not get a chance to be able to take this setup, please, please, please make sure y'all go to my Telegram. If y'all do not have access to my Telegram, I'm about to go ahead and drop it in the chat, so you guys can go. You can take advantage of the setup. And then obviously, I will give you guys the updates as the market does what it does. Hopefully it activates. If it doesn't, obviously at you know, a relative time, I will come back and say delete it. But ladies and gentlemen, with that being said, that's pretty much it. So I appreciate you guys as always. I definitely see a couple of my regulars that got on the call. And the thing I want you guys to be able to focus on, just think about it, right? When you think about Tyree and think about yourself, ask yourself, okay, I'm starting to notice that damn near every setup that Tyree takes looks exactly the same, right? I'm gonna repeat that one more time. Start noticing damn near every setup I am taking looks exactly the same. Depending on the success or lack thereof that you are having in your trading journey, start thinking about, do your setups look the same or do they look completely different from one setup to the next? I would used to struggle because all of my setups used to look completely different. And whenever I identified that, I was like, that's why I'm not being successful and consistent, because my setups are all over the place. This setup looks like this, the next one looks like that. Now that I have a more uniform idea of what I want to look for, all of my setups, not obviously technically, all of my setups look relatively the same. Okay. That is where you want to be in your trading journey. So, like I said, this video is recorded. It will be uploaded later today on my YouTube channel as usual. And you want to know what I'm about to do? I'm about to go into student mode. I'm about to go hop on this John Dowry, Rob Kumar, go live session, and I'm about to continue to get educated. So love you guys. Appreciate you guys. Yes, we will be back in the market tomorrow night at the exact same time, 1 a.m. Central, 2 a.m. Eastern. You guys trade safely in the market. Don't do anything I wouldn't do, and have a blessed night. Peace.